Welcome to a special instance of the Building Texas show. And we're here with Brian Peckinpaugh from Baker Hill. And you're actually visiting Texas, and you're in and out of Texas a lot. But thank you for being here today.
I couldn't be happier to be here, Justin. Thanks for having me on behalf of Baker Hill.
Yeah.
Thanks for thinking about us and being interested in what we do.
And what is Baker Hill?
It's a great question.
Yeah.
I like to refer to ourselves as a 40-year-old startup.
Okay.
So Baker Hill has been around for going on 41 years now, which is an eternity in the fintech space, and that's financial technology for those that may not be familiar with it. We were founded in 1984. We created the industry for commercial banking technology. We were the first in the market selling spreading software to banks and credit unions, helping them analyze commercial lending transactions. We like to tell the story of our founders. Not only were they having to sell software, but they were having to convince banks and credit unions to buy personal computers to put on desks, right? So that's how far back we go in this space. And we've just continued to innovate within it. We're on our third generation of lending technology and really just looking to help those community financial institutions better serve the communities they operate in.
I can't imagine banking without computers. I mean, it's so much of what we do today. It's on your phone. You have your banking apps. You get a bunch of text messages trying to get your information. It's very much, technology to me has always been part of banking, but that shows my age and experience. But that's not the case. And working with you, I've found that some of these, there's still a big road of modernization ahead for a lot of banks.
Mm-hmm. Yeah, it's wild. Like you, most of my career has been spent when computers were just a part of it. We live with these phones attached to our hip and do everything on them. But the rapid increase in innovation in the banking space has really only been in the last 30 to 40 years. Banking at its core has been the same for hundreds of years. We talk about the movie It's a Wonderful Life a lot inside of Baker Hill, where the experience of banking, the processes that they were going through in that community bank, if you were to bring them into today, they could still make a loan. They would still know how to evaluate a credit, but they would have no idea how to do it with the systems that we're operating with today. Which brings its own unique challenges to how a banker operates in today's day and age, even though the underlying processes probably haven't changed that much.
It's interesting that you all use that movie a lot in what you're talking about, because as I vaguely remember the storyline, it does tie into the community around banking.
Mm-hmm.
And you're here today with me talking about community building and really the impact of the local community bank on startups.
Mm-hmm.
And it's not just startups. It is your nonprofit. That is your baseball team. Community banks play such an important role. And I don't know, are they keeping up?
In a lot of instances, no. And it's the view of competition has changed so much, where it used to be, what's the bank across the street doing? What's the tier one bank? The Goliath bank, if you will, not to use any existing banking brands, right?
You can see in every state, in every city across the country,
that's
not a community bank.
No, they operate in some of the communities, but not necessarily in all of the communities. Yeah. And there's no community in the United States that doesn't need banking services, right? And going back to It's a Wonderful Life, at the end of the day, kind of the crux of that movie is this feeling of not having value, of not doing something that matters. I even make the joke when we're in selling to financial institutions that, hey, at the end of the day, on my worst day, nobody dies. I'm not a neurosurgeon if I'm not My screw ups don't result in loss of life or long term consequences of those kinds of natures. But what we are doing really matters, right? When you think about the role that a community bank plays in their community, it's easy to think about the deposits. It's easy to think about the consumer side of things where, we need a car loan or we need a mortgage or something like that. But what's lost is the fact that the entire community runs on what that bank provides. It's the money that's lent out to the small businesses, the landscapers that keep everybody's yards looking nice, that are cleaning up the debris from a city perspective. It's the infrastructure work. How are you funding the running of the electric lines or the repair of the streets? And at the end of the day, it's the small businesses that move the community, and it's the banks that bank them that allow them to do it. And while yes, I'm not, we're not neurosurgeons, we're not saving lives. Our ability to get those loans through an effective process to put the right money on the streets is what allows those small business owners to put food on the table, to pay their bills, to send their kids to the private schools if that's what they feel is best for their families. That all kind of is on the backs of these community financial institutions. And that was the moral of the story of It's a Wonderful Life, was not understanding that impact, not understanding all of those connection points that come from a bank that's beyond just where you keep your deposits.
Well, I don't want to linger on it too long because it's not a fun topic, but you say there's not a loss of life or there's not an immediate impact, but with a shrinking community bank, there is a long-term quality of life impact. And I see that in my kids' sports, and you look out on that baseball field and you're going to see the community banks listed.
Mm-hmm.
And then in the community that we're in, I want to say it's something like 74% of our small businesses are really like 10 people or less.
Mm-hmm.
And 10 people or less small business is a hard quality of life because you're doing everything.
Mm-hmm.
And having a good bank relationship that you can walk in face to face, all of that is critically important until it isn't. Right? If it's that much more expensive or it's that much more time consuming, cumbersome. But nowadays you can go on to any number of digital banks and not accomplish the same goal, but you can probably get close enough. And from an efficiency standpoint, all these reasons, it's a much more competitive market for our community banks. And I want to circle back. And for those that don't spend as much time as you do in the banking industry, when we say community bank, we talked about the big conglomerate, right? That can be in every city, every state. What is a community bank? What is a regional bank? And then what's a credit union? What's the difference between those three?
Sure. Yeah, that's a great question. And like you said, we just live it and breathe it every day. It's second nature to us. And those definitions will vary. We think in terms of asset sizes when we think about financial institutions. And it's an inverse thought where to a bank, the deposits that we as consumers put in are actually the bank's liabilities. They owe that back to you.
Yeah.
The assets are what they put back out as far as loans and other services that they provide. The community bank space are going to be those financial institutions that hold up to about 10, 15 billion in assets. Then you start moving into that regional space, but it's really at the end of the day about who they serve. The communities are focused on towns, counties, those kind of geographical distributions. The regionals start to cover whole states or multi-state from a footprint perspective. And then you go up into your super regionals, larger footprints, larger territories, national and global banks. Depending on who you talk to, they'll put different thresholds on it as to where those asset tiers range. We could spend probably all day talking about those delineations because you have legacy like savings and loan structures versus commercial banks and other things. But loosely speaking, that's kind of what you're going to see as a breakdown. And then you've got the delineation between banks and credit unions.
Yeah.
Credit unions are not for profit as opposed to banks, which are profit center institutions. The credit unions are going to be very mission focused. They are going to be driven by a very specific charter, where that charter could be local. That could be residents of a city, set of cities, a county. There are a lot of them that are tied to employment. So you might have a police and fire credit union. You may have a large local employer who creates their own, or created at one point their own credit union that served the employees just of that company, and all kinds of different things in between. So you'll see lots of different charters, but they are very specific, and they can only bank people that fit that charter. Probably the most familiar that your listeners will probably have is all of the USAA Gronk commercials, right?
Oh yeah.
Or Gronk, is it USAA or is it Navy Federal? I can't remember. USAA.
Like he wants to sneak in and be a member.
Exactly, yeah. But he didn't serve in the military, didn't have a parent, or So that's really the crux of credit unions. Think of Gronk and USAA, and that's kind of where credit unions live. But that's the broad delineation of the market. But to your point, it's gotten well beyond that in the financial services sector. It is no longer competing with the banks or the credit unions across the street or down the road. It's all of these other fintech companies that have started to develop banking-like technology. Yep. There are what we call neobanks in the space, which are financial technology companies that in some instances have acquired a banking charter so they can operate like a bank, or they have just created a digital bank that offers banking-like services. You can give them deposits. They will lend money back out. They may do check processing and some other things, but they are not a regulated financial institution, whereas the banks in the country will be regulated by the FDIC. Credit unions will be regulated by the NCUA. There are also some state chartered institutions that bring some value to those institutions of your deposits being insured at those institutions, whereas you don't have that with these neobanks and fintechs. And they have built their companies on providing the banking-like services, which is difficult for the average consumer to understand. As we've talked throughout today, I've got teenage kids. I've got 17-year-old twin boys and a 14-year-old back home, that if you asked them what a bank is, they'd probably not really have any idea. To them, a bank is Apple Pay. To them, a bank is Venmo. They're banking-like services that the average consumer thinks that that's all they need. I need a place to put my deposits. I need a place to get a loan if I'm buying a car or a house or something like that. Maybe if I'm a small business, I need payroll type services. I need a credit card, things like that. That is what people associate with banks. And so they look at it and they say, oh, well, from a SoFi or something, I can get a lot of those products and services. That's all I need from a bank. Well, what you actually need from a bank is the advice. Yeah. You need the anchor to your financial life, somebody who can look at it and help you, guide you through your financial journey. Yes, provide you the services, but at the right time, to the right degree, and making sure you don't overcommit and get into the wrong products just because you think it's what you want.
With founders, we talk a lot about their investment strategies and where the money's going to come from. And I like to say that not all dollars are equal.
Mm-hmm.
It's the same in this, but reversed a little bit. I see, 8% return on a savings account, but it is not equal to what you can get in a community bank or any bank, really, because it's not insured, it's not protected. And we've seen instances over the last few years where technology has turned around and had a negative impact on its customer base. And we'll say it wasn't intentional, but it didn't have the regulatory or the history to really be protective of that quality of life. And you are, as an independent business owner or an independent person, you're only as good as you are. And it's really important to have that key relationship that's there to give you advice, guidance, open the toolbox. Bankers have a number of tools available to them that they understand for financial need.
Mm-hmm.
Their solution to a cash flow problem will be very different than what you're going to come up with on your own at the dinner table. So I just want to encourage getting in and understanding that difference. And a lot of bankers will say, oh, come build a relationship before you need us. And that is true. But build a relationship with a banker that can build that relationship back with you.
Right.
And sees themselves as that strategic advisor, goes above and beyond, and isn't just trying to get you on your next loan, but says, hey, how's your business doing? That's an incredible part. And before we go into the next one, you're in Boerne, Texas today because Baker Hill has a relatively new CEO, and he's one of our favorite people here in our community because he's done so much. And he's got a long history as a technologist in financial services. And that's Andy Ivankovich. If you don't know him, he's worth a follow on LinkedIn. But his mission is just this. He wants to innovate, and I think that's why he and Baker Hill are a great fit, of how do we innovate banking into this modern world, but still hold on to that old world strategic advisor, relationship building, business partner mentality, but just make it easier. And I hate to simplify it to that, but I think that's about what he's after.
Right. And he's one of our favorite people too. Even if Boerne gets to claim him first, that's okay. We'll share. But yes, Andy joined us in 2024. Has worked with us since late summer, and really starting to crystallize a plan for what's next here at Baker Hill. As I mentioned at the onset, we like to think of ourselves as a 40-year-old startup. We've got 40 years of history. We've seen a lot in the macroeconomic climate. We've seen boom times. We've seen bust times. We've seen really strong lending markets and really restrictive lending markets. And our technology considers that and brings it to bear. And we've got a fantastic engine. Andy likes to say we've got the IBM of commercial lending in our platform. And what we're now looking to do is build on that and bring the next layer of innovation, and really working off of a North Star internally, if you will, of how do we help these community financial institutions to lend better, lend faster, and at the end of the day, and maybe most importantly, lend more. Because the more these financial institutions are able to put back into the communities, the more we're able to grow the communities, to help them flourish, to as you said, just innovate across the board. Yep. Right? It's those dollars that drive the innovation that powers the local economies.
And you're enabling a bank that may not be deep into their technology roadmap, but you could enable them pretty early to meet their customers, similar to what these neobanks or fintechs are on their phone. And you could equip, let's say, a legacy bank into that modern world fairly quickly.
Sure.
And that's what I appreciate about what I've seen of Baker Hill and what I know about the vision going forward is really to draw it back into that community, to draw that banking relationship back in through technology. It's not just creating efficiency. It's going to move faster. That's good for the bank. But there's a spirit of let's make it good for the community.
Correct. Yeah, it's serving the basic tenets of us as human beings, right? Yeah. Where what we're looking for in anybody that we do business with, maybe most importantly in banking, but I think it's applicable to anything, is when I'm engaging with a business, I want to come out of that interaction with a feeling that you know who I am. I'm not just a consumer. I'm not just a card that I put into your machine and had a transaction. You know who I am in the banking space. It's eliminating the rekeying of data. If I'm an existing client of your financial institution, I shouldn't have to key my name, my address. You should know that.
Yeah.
Why are you making me give it to you again?
Fill out the first 3 pages with what you know.
If I gave you my tax returns for a previous loan, if I gave you my driver's license, if I gave you other pieces of documentation, don't ask again. You have it, right? Reuse it. So know me, value me as a person, as a business, as what I represent holistically at the financial institution. Again, I'm not here as a transaction. I may be requesting an auto loan, but you might have my mortgage, you might have my home equity, you might have my retirement, you might have my checking, my savings, all of these things that should be thought of in the whole, not just for me, but for my family, for the businesses I represent, et cetera. Being able to see all of that at a glance so that you can value me and the current interaction in the big picture is important to any of us as a consumer, right? I engage with the same brands over and over and over again because I know they value my business, that we align together. And you need to do the same thing in banking, right? You need to make sure that you understand that just because I'm here to get a car loan to buy my son or daughter their first vehicle and help them build some credit history and those things, take into account that I've got $500,000 or $1 million in relationship with you, and bring that to bear in that interaction. And then lastly, and this is just becoming more important than ever, you have to make it easy. It has to be easy to bank with you. We're going through a pretty good cold snap up in Cleveland, which is where I'm from, and really we're just back to a normal winter. We've gotten lucky.
Snow's
the last
turn, the northern.
Snow, it's the great white north again. For those Game of Thrones fans, winter is here. It's not just coming. But my twins had a soccer game. We had a snow-covered field. They recruited parents to come help shovel the field off, and I'm like, that does not sound fun. Let me see if I can buy a 4x4 and a plow on Amazon. Didn't buy it, but turns out you can.
Yeah, delivered in 2 days.
Exactly. But I can't get a business loan in less than 60 days from some of these financial institutions. That's not easy. And that's the experience that everybody has come to expect, because I can pull up my phone right now and have it delivered, like you said, in 2 days. And those fintechs, those neobanks have spent the last 10 years or more building the technology to empower that.
Yeah.
And that feels good to the banking consumer. They can go on to a SoFi and get a small business loan in a matter of minutes, depending on what they're trying to do. If you're not delivering that same experience as a community bank, as a credit union, you're going to lose out to them. And, that's how the erosion of your core business starts to happen.
Well, and it slips away so quickly in that example. But what I heard you say is these people put a lot of time and effort and energy into just understanding who's across the desk from them.
Mm-hmm.
And they spend all of that time trying to say, okay, this person's coming in. I need to look at these accounts. And typically they're in distributed systems. Your mortgage is over here. Your car loans are over here.
You got it.
If you're a commercial loan, that's probably at a different terminal. The experience I've had with banking, it seems very distributed.
Mm-hmm.
And you have to go to the right person with the right permission slip to get this next thing done. And that doesn't feel good. That drives me to the app on my phone where I don't have to talk to anybody.
Mm-hmm.
But somewhere in between, highly bureaucratic system or on my phone in a minute is the right answer, because on the phone in the minute doesn't give you the relationship, doesn't give you the history and just the memory that you get at the consumer bank.
It's good for certain things.
It can get the task done, but it doesn't strategize your next 18 months.
Right.
But neither does that banker that's sitting there scrambling, trying to find all the paper.
Right.
They just don't have the capacity to do what we would want them to do as bankers.
Correct.
You're
spot on.
Is that what's happening?
It is. We actually call it the swivel chair problem.
Okay.
So, like you said, these bankers have multiple systems they have to go to, and they're constantly bouncing back and forth, right, to try to get the necessary information to paint the picture.
Yep.
To understand the story that's in front of them, and you end up in the wrong end of an 80-20 problem. So if I've got an hour to work with, you as a person or you as your business, in today's world, 80% of that hour can get lost in the swivel chair. They can get lost in trying to access all of these different systems to get the information centralized. And only 20% of my hour spent doing the analysis and the education to the potential borrower or customer. That doesn't feel good, right? That's not, you mentioned earlier that idea of go get to know your banker now so that when you're ready for the banker, you have the relationship. It's a give value to get value problem.
Yeah.
Right. In
you
today's,
get what you give.
Exactly. In today's environment, in a lot of financial institutions, it's this constant barrage, this reach out of come in and talk to your banker, get to know your banker. Well, for why? What are they going to?
How long are they going to be
do?
Yeah.
Is it going to still be the same banker in 6 months? What am I going to get by going into the branch and meeting this person? As opposed to it with technology like Baker Hill provides in our platform, we can flip that 80-20 back so that only 20% of your time or less potentially is spent on the administrative tasks. We can eliminate a lot of the swivel chair by centralizing the data. We can quickly build capacity in somebody's day where they can spend the time doing the analysis, learning about your business, learning about you as a person, so that they can spend that 80% advising, educating. That's value. If I can sit down with you and say, hey, here's some thoughts on how you can better manage your personal finances. Here's a way you can better manage your business. Hey, did you know that you could run separate accounts for these purposes? Did you know that you can aggregate this stuff at the end of the day into a sweep account and earn a little bit higher return on your money? Did you know that we offer credit cards that are different for business or personal? There's all kinds of advice and education that you can provide given the time to do it.
And we see that professionally in why you'd hire a realtor, why you would hire a licensed plumber, why you would hire the trades, and there can be professional trades too. Like you go to a professional to do that. And I think we just look at banks transactionally. I go to deposit checks if we still have checks being deposited. But
I get one every once in a while.
But technology's really shifted us out of the bank. But I don't know what brings us back in. But I do know that I want to go talk to my community bankers when I need that advice, when I have a cash flow problem and, hey, I need a 60-day solution. Well, I'm not going to find a 60-day solution if I don't already have a relationship with them. And I'm not going to find a 60-day solution if it's going to take me 90 days to get the cash loan or the line of credit or whatever through their process. But I'm hearing that, well, if I know them, I have some business with them, and they're a Baker Hill bank, they're going to know me when I walk in. We're going to spend less time talking about the 90-day line of credit process and more time about what's the core root, what is the issue. Hey, let's take a 2-year look back on your cash flow. Where did this show up? And to me, that's a banker that becomes a partner in your business.
And it becomes a true part of the community, right?
Yeah.
That is bringing much more than the transactional nature that you were talking about. If all I need is the transaction, I'm going to get better rates at the Goliath Bank. I'm going to get better rates at the Fintech that doesn't have to worry about the regulatory compliance aspects. They don't have anywhere near the overhead that the community bank does to provide the insured deposits and things like that. So it's freeing up those community bankers to get back into the community, to have time in their day to keep up educationally on what's going on in markets. What are the predominant local businesses? Can I be more of an expert in certain business types that happen to drive that community that I operate in? That we've gotten away from. We've allowed it to turn transactional. We talk every once in a while at Baker Hill about a lost generation of banking. So we've had this reintroduction of interest rates in the last few years, and everybody has talked about being at a unprecedented level of interest rates, and it's really
That's
not
true.
It's a return to normal.
Yeah.
The time period from 2000 to 2023 ish, when interest rates were zero, where money was free, that had never happened before. That was new and different. We got really quickly back. The rates raised very fast, but all we did was get back to normal. But that was 20 years of bringing bankers into a system where money was free. I didn't have to worry about some of these things. I didn't have to worry about bigger pictures because I could go get money for free if I needed it. Now I've got to think about the bigger picture. I've got to think not just about lending the money, but how am I going to fund that? How can I do that with high quality deposits, with overall relationships that are stable? We saw that back in 23 with some of the bank failures, where bad capitalization, bad short-term interest rate scenarios, where they overextended themselves thinking that it would be free money forever. And that should never have been anybody's bet.
A lot of entrepreneurs put their money in one of those scenarios, and they had too much money in that.
Mm-hmm.
So there is value to having diversity as how you store your money.
Mm-hmm.
But it goes back to they were attracted to that bank because it filled a niche, and it became their banking partner.
Right.
Probably wasn't the right partner in hindsight, but that went from an ultra local concept to it's a global concept now.
Mm-hmm.
And in our entrepreneurial space, I'm called to remind myself and remind our audience to really keep yourself bankable.
Mm-hmm.
And part of that is understanding the process, understanding what it means to build a relationship with a banker. That doesn't mean you're going to the networking events and having breakfast with them all the time. They like that.
Yeah, it's good to get a good breakfast.
We all do. But a relationship with a banker really is deep diving into your business and deep diving into uncomfortable parts of your personal financial life, because that is your bankability. That is what the financial world looks at, regardless of what bank you're in.
Mm-hmm.
They're going to look at how you spend, how you manage, how risky are you.
Mm-hmm. Absolutely.
And that's better done when you have a relationship. They understand your business. They understand that you're a subject matter expert in your business. That's why you're doing it. And I just think we've made it transactional, and I want to get people back in. I want to challenge our audience to go ask their banker a harder question.
And also be okay with the hard to receive answers.
Yeah.
Right. Again, this to a certain extent has been a race to the bottom.
Yeah.
Because of where the interest rates were, everybody was just chasing the either highest bips on what can I earn in my savings, or what are the lowest rates I can pay on a loan. And sometimes commodity stuff sounds good. End of the day, a lot of times it's not. And the reality is, especially when it comes to lending, you're likely to find somebody that's going to say yes.
Yeah.
Right. If I'm a business and I'm going out and I think I need $1 million, there's some bank out there that's probably going to say yes. I'd encourage you to really listen to the bank that says no.
Yeah.
There's a reason. Nobody ever questions the yes. Everybody questions, and everybody goes, well, Bank XYZ said yes. Why are you saying no? Why aren't you telling me yes? Instead of saying, what's the reason? Why did they say yes? Right? And are you having to put up your house? Are you having to put up your retirement? Are you having to put up other assets to get that loan, such that if your business fails, you fail?
Yeah.
Right? You're now having to worry about where car payments are going to come from, where school payments are going to come from. Can I keep my kids in the extracurriculars? What does my life look like? Find those bankers.
Well, and if you have the relationship already, that's what they're looking out for. That's not just to tell you no, because they want to say yes. It's in their interest to say yes,
Right.
typically.
Mm-hmm.
But they're telling you no for a good reason. And if you don't ask the why, or if you just get emotionally and frustrated and you go to the bank next door,
Mm-hmm.
that's not a recipe for success.
No.
So you can learn a lot early and often. And it takes me back to Andy coming into leadership for Baker Hill and the disruptive innovator that he is. We've seen him in his past companies really innovate fintech,
Mm-hmm.
but he's always saying, where is it going?
Right.
And he's, I assume, knowing him a little bit, that he's encouraging the team and the technology to really follow where is it going.
And I would even say we're trying to take it a step further,
Okay.
especially for community banks and credit unions. I'm sure lots of people in your audience have heard the Wayne Gretzky quote about skating where the puck is going, and that's kind of what you're talking about. Generally speaking, in the innovation space, that's what you're trying to do. You're trying to read where the puck's going and build to meet it there. We think there's an opportunity in the community banking sector for those community banks and credit unions. If we get the right like-minded set together, and we're looking to do that through some ways I'll tell you about in a second, to build a cohort of folks, of like-minded people, to say, how do we bring this back? How do we reclaim community banking? And as a whole, try to dictate where we want the puck to go.
Yeah.
And that is a return to traditional banking. That is a return to bankers as advisors, bankers as advocates, bankers as leaders of the community, bankers as the backbone of a good, healthy, thriving community. And that is through empowering them with technology to free up time in their day to stay on top of their education, to stay on top of their community, and to stay on top of the relationships that they are responsible for. And what we're looking to do is try to plant ourselves in these communities. We have a fantastic client base at Baker Hill, 400 strong financial institutions that leverage our technology day in and day out, to the tune of about $1 billion a month that is being lent back out into these communities through our platforms, and trying to find these innovative sectors where we're going to look to open innovation campuses in conjunction with our partners.
Yep.
We've just opened one in Santa Barbara, California, with a partner bank of ours, Montecito Bank and Trust, where they're one of those people that want to tell the industry where the puck is going. And we're, I'm sure, with Andy here in Bernie, going to be looking at Texas next as to where we're going to plant another flag, to say, hey, we're here. We operate in Texas with a view on what matters to Texas and the innovation and where the puck needs to go here as well. So I would keep eyes out for that as we look to find those innovation partners here, like we have in Santa Barbara, and we'll have more that continue to grow. In addition to our headquarters in Carmel, Indiana, a nice little suburb of Indianapolis. If anybody's
the capital of the roundabout,
it is indeed. It actually. So they did a whole episode on Freakonomics radio on it, where I believe Carmel, Indiana is per capita the most roundabouts in the world. Their mayor, the mayor of Carmel, is going to be retiring here soon. There was just last check, there was 3 more roundabouts that he wanted to do, and then he was going to call it done and retire. It could be very confusing for somebody from middle of nowhere, Ohio, who's used to grids, but I've managed. But we operate in that Carmel community. We are a driver of technology innovation in that space. So again, community matters to us. That's where we live and breathe, and we want to bring that to more areas by having some of these innovation campuses spread around.
And that's been recognized for the lifetime of Baker Hill. There's state organizations that nominate you often for innovation. There's a lot of take on how you've been pushing this forward.
Mm-hmm.
I want to go back to the local bank because I'm sitting here thinking every Western I ever watch, the bank was one of the first things in the town.
Sure.
And then with what you just talked about, I think of my bank friends here in our small community. They're underwriting infrastructure. They're underwriting the community. Like if all the banks just up and disappeared and we went neobank, it looks a lot different when we're trying to build a road, when we're trying to build a school, when we're trying to build homes. Like there is a value to having local footprint, local office. And I don't know that the general American public recognizes that today, just because we've become so
we become used to it.
Assumption based, and we need it now, we need it quick. I'm not going to wait 90 days for a loan.
Well, we take it for granted, right?
Yeah.
Because they're there. Because without them, it becomes a matrix and not like the cool matrix in the movies, right? We don't get Keanu Reeves in karate and kung fu. What we get is decisions made on very discrete criteria that you either meet or you don't. That's the model that you would end up signing up for. Is, does your credit score match this? Does your income match that? And not just stated income, but provable income. Provide me a W-2, provide me a bank statement. It becomes very transactional, very inhuman, because it's just, do you fit my model or not? And if the community bank goes away, if it's supplanted by people who aren't there physically, who don't have a vested interest in that community, that's what you're going to end up with, right? It's the Goliath Bank of the world isn't going to come to, podunk nowhere, Kansas, pick a state, and open a branch, right? If Bank of Podunk goes out of business, there's going to be a challenge in getting those more on the fringe services, those more on the fringe loans that are made because they know you, they know your family, they know your history. They look at more than just what they can see in a spreadsheet. They look at, what's your background? Is this your third business and the first two were successful and sold? And this is a pretty safe bet, even though the numbers there's no cash flow yet, there's no assets. But hey, this person knows what they're doing, and this is a pretty easy yes if I explain it the right way and I bring the right soft factors to bear, and not just the easy to find scores and things.
Yeah,
like that.
but that requirement of going through that process is the same if you're a city, if you're a county, if you're a nonprofit. You still got to go in there and have that relationship and the local presence, the local relationship. Or to our earlier point, and where Baker Hill's core strength is of bringing it all together into one place, that's how they can make a better decision and spend 20% trying to figure that out and 80% talking about the why.
Right.
Because, well, why do we need a new road in town? We need new roads in town. Because we've grown. Well, that's a 30-year process. We need to be thinking about it early. And the people that make those decisions and the financial partners that fund those decisions have to be working together at a very, very tight clip.
Yeah.
Early and often.
Absolutely.
So where does somebody go? Like Baker Hill, you've got some exciting programs, conferences coming up. I'm particularly interested in May in San Diego, Malcolm Cladwell.
Absolutely. That's going to be a fun one.
But who comes to a conference? Who should be considering coming to a conference? And how would they find information about that?
Sure. The first place I'd point you to is our website. Go to www.bakerhill.com. You'll see a lot of where we're going to be, what we're going to be doing. We're always out and about at different industry events and conferences. We've got teams traversing the country next week at a few shows, but I think some of the biggest that I would recommend, yes, our conference, I'll talk about that in a minute, but come see us at the Texas Bankers Association event. That's coming up at the end of April. We're going to be, looking to put our best foot forward with our new local presence in Texas, with Andy here in Bernie, with another gentleman, Jonathan Murata, down in Austin. We're investing in Texas. We really want to be here and help the local banking communities. So come see us there first and foremost. But then at our conference, so we are going to be putting on the premier lending conference in the United States this year.
Yep.
We're going to be in San Diego the first week of May. It's great to go to San Diego. Hard to beat the location. We're going to be right there on Coronado Island with 500 of our closest friends. But it's going to be a mix of folks. It'll be industry thought leaders. It will be Malcolm Gladwell that you mentioned. Come listen to his David and Goliath story for those that have read his book on that topic, with a very, I think, resounding message or one that will resonate with the community banks who in that story are the Davids, right, against the Goliath bank out there. So come hear that story for sure. But we'll have CEOs out there from community banks and credit unions as part of a roundtable. We'll have administrators who are there to learn to better understand the product and how they can configure it to their needs and use cases. And we'll have everything in between. So we'll have heads of lending, we'll have heads of credit, we'll have people that do all aspects of banking that you can come and learn from and network with. We'll have a lot of great stories being told about what our platform is helping to enable in the communities. As I mentioned, we're putting $1 billion a month back into the communities. You'll hear some of the stories about what those dollars are funding, and then you'll start to see this new wave of innovation. We're going to be highlighting a few key new product areas. We're going to be talking about AI and its practical approach. We're not going to be using the AI term just to use the AI term, but rather to help educate.
Yeah.
What should you be thinking about in its application to the financial sector? Too many people are just saying AI and hoping that'll sell. We're going to try to teach you the right way to think about it, the right way to deploy it. We're going to be looking at document processing in the lending space. It's very document heavy.
Yep.
Providing your financial statements, your tax returns, your identifying documents, your bank statements, et cetera. How can I bring tools to bear to automate the processing of those, to take, again, work off the administrative table? We're going to be talking about the digital experience. We're going to be talking about what it looks like to provide a true digital engagement that encompasses onboarding a new client, a new business, whatever it might be, and providing a multitude of banking products, deposit accounts, lending accounts, those things that are necessary to run a small business, and doing it in a digital channel with as close to a immediate yes as possible for those that meet the right criteria. So there's going to be a lot of very, very cool, very exciting, innovative solutions that we're bringing to bear, all backed by the partner financial institutions who are working with us to make it real. So we're not just a flash in the pan startup who is doing this in a lab.
Yeah.
We're doing this based on our 40-year history, our client base that's been with us through that entire journey, and using them and their expertise and their real world scenarios to help us make sure we're building the right thing, again, to try to tell the puck where to go and not just react to it.
Well, I appreciate that people like you and the Baker Hill team are focused on that, because I can't imagine a world where community banks aren't leading the charge on community building, community safety, community infrastructure, and finally just introducing the kids to what a bank is. And it's not your phone. Having them go in there and do that. And that's what community banks, in my mind, are doing.
Mm-hmm.
And then they are the strategic advisors. And I hope we can find bank leaders that say the tide is shifting. I don't know where to go next, but Baker Hill sounds like they might have something to offer, and they come out and they learn and they hear from your customers. They hear from the rural bank in the southeast of the country that has really revitalized their community, because they know that when they're loaning on housing starts, they're paying and providing income to the trades that are going to build that house.
Right.
And it's a full ecosystem around small towns, big towns. It doesn't matter. It all is circular. That money comes and goes. And if we're sending it all to New York or Dubai or wherever you're going to be sending it, and you may not even know,
Correct. Yep.
it's not coming back to the baseball field
Yep.
in support.
Mm-hmm.
It's not coming back to your local city infrastructure as the best use of tax funding to solve this problem.
Mm-hmm.
And that really concerns me because that can happen quickly. And if a banker or a bank is not right on top of that,
yep,
in today's world, they lose.
Mm-hmm.
They
do. Yeah. The way I think about it is the small businesses are the lifeblood of the United States economy.
Yeah.
Right. You look at the percentages. You mentioned the 10 people or less companies, but even expanding that a little bit, the small business makes up a vast majority of the revenue that gets produced. And the lifeblood of those small businesses are the community banks and credit unions. That's where most of them bank their business relationships. And you start to erode either of those, and what are we as a country, right? You hate to be hyperbolic, but at the same time, this is the lifeblood. This is who we are as a nation, and we've got to support it. We've got to find ways to ensure that all of our communities thrive. Like you said, not just big cities, not just little cities, all of them.
Yeah.
We need them all, and the only way to do that is to make sure we're driving the success of these community financial institutions.
It is an ecosystem, and if one part of it gets a little bit sick or a little bit slow, it has a lagging effect on everyone.
Mm-hmm.
So I appreciate our community bank partners. Bryan Peckinpaugh from Baker Hill, thank you so much for coming to Texas and the mission that you and your team are on to really help these community banks modernize, get into technology, and not in a scary way, but here's how we can give you time back to really be the best banker possible for your customers. So thank you for all the work you're doing and for spending time with us today.
Appreciate it. Happy to come this time of the year. Don't ask me back in July.
Yes, there you go. Well, thank you.
Thanks, Justin.